Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap on another really impressive day for this market, driven again by geopolitical news. This morning we had a big gap up thanks to news that the U.S. might explore more seriously than we first thought, the idea of a diplomatic solution in Syria. And the whole situation's just been handled a little bit comically, you might say. The president was talking a tough game about Syria and then was sort of forced into following up with potential military action because of his tough talk. He didn't want the United States to come off as being weak. And then this latest turn is due to the fact that John Kerry just made some offhand remarks about how the U.S. might, if Syria were to give up its chemical weapons stockpile, give it up to international control for eventual destruction, then that might prevent military-type action. He actually quickly backpedaled from that statement, but then the president sort of was like, okay, this is maybe a chance for me to save face a little bit, get a solution that's favorable for us without going and pursuing another unpopular war, and one that we don't really have any chance of winning or doing anything that's going to benefit us. So we sort of stumbled into maybe an outcome that might work for everyone now, and it appears like this outcome might work well for the market based on today's strength. But again, really impressive action in the S&P over the last 5 days, a 6-day winning streak actually for the S&P. Take a look at the chart and you can see a visual of that movement. It's sort of been tough from a trading perspective to really have a lot of conviction in the bounce due to the fact that headlines are really driving the price action right now. But there have been, as we noted for a lot of this week, more constructive chart patterns setting up. But you look at the S&P, obviously we're back above the 8 and 21-day moving averages, where they're curling up. We're back above all major moving averages, above the 50-day here again. We're sort of now in no man's land right now. Some, as Scott has been talking about, might say this is the beginning of maybe a right shoulder. But it'll be interesting to see whether we can continue to push higher after filling this gap. And then highs are the only major obstacle in the way. Would really be something to see the market back at 2013 highs if we do get there. But nothing really to say right now except really impressive constructive action in the S&P. Tough to chase after 6 straight up days, but it is what it is right now, and you do have to remain a little bit sensitive to the headlines. But like we've talked about, even if there are macro geopolitical headlines, you can still play the best in breed stocks, the one with the best setups, and sort of ignore what's going on with the choppiness in the indices. And on our Off the Charts newsletter, on Scott's morning note, especially in the virtual trading floor, which has been just an outstanding resource all year for our subscribers. People continue to serve up really great ideas that have worked out really well. And today was certainly no exception with the really great. We got good price action in the spiders, but that paled in comparison to some of the moves we got in individual stocks today. And the top of that list, you have to put SolarCity. SCTY is a stock that Scott, or Mark more specifically, has been talking about it a lot in the virtual trading floor. There's some stuff that you might not see on Twitter, you might not see in the free areas of our site, that you'll see on people's position windows in the virtual trading floor. You'll see people discussing it, and this is one that Mark talked about really liking the setup in SolarCity, despite the fact that it is in a really firm downtrend. But you take a look at the chart of SolarCity, SCTY, it's the company that Elon Musk is the chairman of. He's also the CEO of Tesla, if you hadn't heard of that stock by now. But when a stock is in a really steep descending channel, obviously you're not just going to enter it blindly looking for a bounce. You're going to look for some sort of calculated area to get involved. And so the area that Mark was looking to was obviously going to be a break of this downtrend. And that's what we got today. We got some news about new funding and stuff like that for SolarCity. And you got an absolutely monster move. I think it was about a 17% move by the time the day was done. It made big moves in the morning, and then every time it looked like it was a little bit out of gas, it would break above the highs of the day again. And with that move, obviously, the 8 and 21 day are going to be curling up now. The EMAs especially, considering the recent price action, we're back above those EMAs, and we're back above the 100-day as well. So just in one fell swoop, SCTY really altered its composure in a big way. And something I talk about on our videos and in our education is that when you get a huge igniting move like this, a 17% move, where there's really commitment to the upside all day long, it often leads to more upside. It's psychologically, it's tough to chase stocks like this, but when you get a big move like this, oftentimes it does lead to more upside. So you need to look at more resistance levels in place. We'll probably take a look at those and off the charts tonight, maybe in some subsequent morning calls this week. But really incredible price action today in SolarCity. Just shows you that, yes, most of the time we look to trade with the trend and look to play breakouts on upper level bases, but sometimes you can get a little bit of a contrarian type of play in a stock that's in a downtrend using a calculated strategy, a calculated entry, and that's what you got in SolarCity, and you got a move that would surpass most people's expectations in a one-day sense, about a 17% move. So really great price action there. And I'll touch briefly on Apple, even though the price action wasn't good in Apple today. Obviously, it was in the headlines a lot because they were having their product event. And the product event pretty much came and went how everybody expected it to. But I think there was expectations for a little bit more new stuff in the new iPhone rather than just what they came out with, which was a new home screen, which is a fingerprint sensor, a different type of home button, and some improvements to their camera, their processor. There'll be a new processor that'll be faster, stuff like that. But it really wasn't anything to excite people tremendously. So the stock sold off as a result. You can take a look at the chart. Obviously, very bearish candlestick today for Apple. It's one that we were maybe looking for more upside based on the fact that we have a two-day event, and I'll get to that in a second. But we have a two-day event coming up where today they were going to unveil what most expected to be their new iPhones, which turned out to be what I described there, the improvements to the 5S and then also the 5C, which is their cheaper model. Remains to be seen whether that's a sound business decision. But then we also have a product event tomorrow that's going to revolve around China. So that's the one that a lot of people were a little bit more excited about, bringing something to the table that might not have already been there, because the smartphone market in the United States is pretty saturated, especially in terms of Apple. Their market share is pretty saturated, and actually Android phones are eating into Apple's market share a little bit in the United States. So there's not huge growth potential in the U.S. for Apple smartphones. The real opportunity is a place like China, where the iPhone hasn't really caught on due, they think, perhaps to price issues. So that's one reason they're coming out with a phone like the 5C. They think hopefully that it'll appeal a little bit more to the lower end markets like the mass market in China. So it'll be interesting to see what they announce tomorrow, whether they announce some sort of deal with China Mobile and get the iPhone in the hands of more people in that country. So that'll be something interesting to watch. Perhaps today's big down move in Apple could actually be a really good buying opportunity. Some people may have seen that today during the session when Apple hit lows around 490 and then bounced. But it remains to be seen what happens with that event tomorrow and Apple's reaction to it. Right now, I think you sort of are light and wait and see mode, and then potentially if a setup develops tomorrow, we could look to get involved. But that's the Apple story for today. It wasn't one of the great movers, but it was something that I just felt like I needed to touch on based on the fact that it was in the headlines. Other great movers today, we could just do some rapid fire through some charts here so I don't give you a soliloquy on every stock that I talk about. But Chipotle, one we talked about in off the charts last night, great upper level base after a gap up. That's our bread and butter type of pattern. A nice breakout today, really constructive actions, what we love to see in a stock, high beta stock like CMG. Baidu, a couple of Chinese names I'll talk about here. Baidu, almost the exact same situation as Chipotle, slightly different chart, but same idea with the gap up base. It's still not above this, if you talk about a month-long base in Baidu, but really impressive action today to stretch away from the 8-day moving average. This is one that I anticipate breaking out sometime over the next few weeks. Sina, another one that still has room to clear its real pivot on the upper level base, but broke above this sort of mini pivot, I guess you could say, from the last few trading days. An impressive action there after the gap up. So some strength to note in those Chinese names. Sina and Baidu were two of the best. Netflix was the rock star of the day today. And this company, just the comeback that it has been on since bottoming out around the $60 area is just amazing. People have written that company off for dead after they split their DVD by mail and their streaming businesses. But the comeback, like I said, has been extremely swift, and it just doesn't feel like it's really coming close to an end now. You take a look back on the monthly chart, you can see that huge move. All-time highs today with this eruption in Netflix. And you don't usually see charts like this. You don't usually see a stock that's just absolutely a darling of the market for a few years. In 2008, it was all the way down below $50 a share, went up to $300. You can see all this on the chart. Came all the way back down, and then all the way back up. That's not really a common chart pattern that you see, but it's what we're seeing in Netflix, and you can't ignore the recent price action that we've seen. Obviously tough to chase after today's extension to the upside, but one that people talk about how it's an attractive takeover candidate for tons of even bigger companies than it, and it will continue to get that type of buzz, and the company's on an upward trajectory in terms of their profitability, even though they have a ways to go to justify the valuation they're currently trading at. Price is king. You don't short based on valuation. You short, if ever, based on technicals, and there's certainly nothing in the technicals right now to tell you Netflix is going to go down substantially. Maybe you could look for a cute type reversal setup in a stock like this tomorrow, but definitely not something that you blindly short. Incredible action here in Netflix. Tesla, one that is, like the market has been in 2013, Tesla has been the market on steroids. Talk about resilience. Tesla, much publicized move from all the way down here in the $40 area earlier this year, up to almost 180 at one point. Still not very far off those highs, but when I talk about resilience, I'm talking about the 8 and 21 day moving averages are the moving averages that we use to gauge composure in a stock. And the strongest stocks are the ones that we see that hold those moving averages during a rally. And if you take a look at Tesla, it's only closed below its 21-day moving average once this year, which is absolutely incredible. On this huge down move, I remember there was a hit piece that came out on it, quickly snapped back and resumed the uptrend. But besides that, we haven't gotten one close below the 21-day moving average. Until it does close below there, you can use that area as a support level. And even this retested this prior breakout level, so there was sort of a double whammy of support there. And what we saw today was a really impressive move off of that 21-day moving average, which is something that we've seen repeatedly over the course of this year. This one still has a high short interest, so on one hand you could say it's a little bit lethargic. Some of the air has come out of it a little bit at certain times, but when you still have that big short interest, you still have a lot of gasoline that when you light a match, which a match could be a break above highs or a break above a pivot, you get those short scrambling again, you get fuel for a move. And so that's what we continue to see in Tesla. And it might take some sort of really parabolic capitulation type upside move to really squeeze a lot of shorts out before we do see a top in Tesla, because the valuation here, everybody understands that it's completely out of whack. The stock is not being treated as a car company. It's being treated as a tech company. Yes, it is a disruptive technology, stuff like that, but the valuation just, you can't even fathom the valuation that Tesla is trading at right now, even with very optimistic models about growth and margins and things like that. But as I talked about with Netflix, you don't short based on valuation. You never do anything based on valuation in the world we live in. But you use technicals as a timing mechanism when you recognize something like this that might have a little bit higher of a valuation. So there will be a time when you can trade, and even in the last week or so, there's been good two-way action in Tesla. You could look to short at strategic spots, and you could look to buy at key support areas. But for right now, I think you got to continue to take it on a short-term basis, and definitely don't blindly short a stock like Tesla, a stock like Netflix. Another stock that's been acting really, really well, CRM. This is one that Rich Annunziata focused on a lot today in the active trader mentoring room. And you talk about our bread and butter type of strategy, a gap up, a base. Sometimes they're not as pretty as you'd like to see them, but you got a really nice gap up, a nice rally off that gap. We did see a gap down a couple weeks ago. I guess that was last week. But then today you got a really nice move out of this above this little pivot here. So a really nice action there in CRM. SLB, one that we've been highlighting over and over again in our Off the Charts newsletter. Out of this, another one, gap and base. That's our bread and butter type of setup that we teach in the Active Trader course. Really nice, looks like a 7-day or so move now for SLB. Today it looked like it might have run out a little bit of steam, but no, it finds its footing and makes another 52-week high. So a really impressive action there from SLB. Not one that I would say you could chase right now, but one to continue to have on your radar. Maybe for a retest of this breakout, you could look to enter it. But really good financials with this company, really good technicals. This is one of those types of stocks that I look to hold on a long-term basis. Basic material stocks been acting really well recently over the last few days, and you've seen that. You've seen transitory moves, short-term moves in some of these basic material stocks that have had a tough time holding, but you've seen some really nice sustained multi-day moves in those stocks today over the last few days. Talk about X, U.S. Steel. Take a look at the chart there. Another really nice extension there for U.S. Steel. And you take a look at the weekly chart there, you can see it's breaking out of a really defined lower level base. Like I said before, most of the time we look to trade with the trend. We look for time frame alignment. We still look for stocks that are strong on monthly, weekly, daily, 60-minute charts, all to line up. And to give you a trade idea, that's something that Rob Smith in his room talks about and focuses on a lot on a very strategic basis. But sometimes there are some laggard type plays when you get short interest and you get lower level patterns that can provide you some good moves. And that's what we've seen this week with U.S. Steel. And you've also seen with a stock like Cliff. Cleveland Cliffs, now just Cliff Natural Resources. You look in the context of this chart, and this isn't that much of a move, but you talk about, you go back to the daily chart, if you talk about playing it as a contrarian play, if we can get back to our chart here. I'll just go off the weekly if the daily's not loading. But you know, if you're playing it off the $15, $16 area, obviously you've got a huge percentage move. And obviously it has some room to the left on the chart to reclaim some resistance levels. It's not one that I would look to necessarily put in the drawer. It's a over-levered company in a sector that's really been underperforming over the last year or so. But it's one that you can look for short-term moves. It's another one with really heavy short interest. And these are types of stocks that are great for trades, great for swing trades. Sometimes a stock like CLF can be a little bit difficult to day trade and trade on a day-in, day-out basis. But if you have a little bit of patience, if you get a good price, you can sometimes let these stocks go and let them make you some money while you're just sitting around playing golf or hiking or whatever you do. Sometimes you don't have to be sitting there and punching the keys every 2 seconds. And this is one that's provided really nice percentage move off of lower levels. More stocks, POT, Potash, another one that's had a really nice move, sort of a contrarian type play that in the virtual trading floor, guys have been all over it. You saw a gap down. You initially saw it reclaim a lot of that gap after really weak earnings, but it's sort of been stuck in that lower level base. But what you can use, you just use these pivots. You know, it's only as difficult as you make it or as complicated as you make it in trading. You just use your pivots here. You could even just set some limit orders. So if it breaks above these pivots, you get an entry, and if you did that, you got a really nice move into some of this gap. But be interesting to see now how much of the gap gets taken back by something like Potash to determine its more macro or swing composure. But for right now, just a nice short-term trade that you look to take profits on, and then you see how it trades in that gap, how well it trades in that gap. Another one, biotechs are another really strong sector that we've been talking about for the entire year, and there have been tons of good setups in that group, but one that I jumped out at me when I was looking at charts prior to coming in here is BIIB, Biogen. And you talk about a lot of the aspects that we look for in a trade idea. As you see, it's been sort of in a multi-month base, not some of the strength you've seen in a lot of the other names, but what you have seen is a really nice igniting 2-day move that happened a couple weeks ago, and then you've seen a really nice constructive bull flag. You talk about your textbook bull flag. That's what you're seeing right now in BIIB, and it's also flagging just below a pivot here. It's not the pivot below highs, but it's just an intermediate pivot here from July. So if we do get a break above this, you could call this the pivot from the bull flag at 231.65. Your first target, or your next obstacle, I guess you could say, would be 234.74. And then the next obstacle obviously would be the highs here at 242.64. You zoom out to the weekly chart, you can see that would mark a big breakout for a stock that's been, on a macro basis, very strong, one of the stars of the biotech industry, and one that has tons of potential. These biotech stocks, when they come up with drugs that are going to be big winners, these stocks can absolutely erupt. And Biogen looks like it has some more juice left in the tank. But that'll about do it. I went over a bunch of charts for you there and the recap. Again, a little bit surprising the strength we've seen from this market over the last week or so with all the headlines hanging over our heads. But I came in here a couple weeks ago and I talked about how, yes, you got to be concerned about the headlines. When you have geopolitical headlines and potential wars going on and brewing, you have to take note of that, but you also have to have conviction in the ideas and the stocks that you want to buy on dips. People say, oh, I want to buy this on a dip, I want to buy this on a dip, I want to invest in the stock market on a dip. When the dip comes, everyone's so scared and so up in arms about everything, they can't pull the trigger. But make a list of your favorite stocks. If they're not at prices right now you're comfortable with entering, put prices down, write them down on a piece of paper to reinforce that, the prices that you want to be involved in these stocks. And when they get there, don't come to me talking about how you're scared and the market has all the geopolitical news and this and that. Yeah, the market is going to be moved by that type of stuff, but individual names can diverge, and that's what we've seen a ton over the last week or so. So while if you were playing the spiders long just based on a coin flip, yeah, you got some nice returns, but you've gotten better returns if you were stalking individual names and looking to identify relative strength and divergences. So some really good action, maybe a little bit extended right now, but I think there will continue to be two-way opportunities in this market, despite the fact that it's a headline-driven environment, which we don't love to see. There are some methodical, more calculated type opportunities, which is what we prefer. But this has been your editor-in-chief, John Darsie, here for the Daily Recap. Scott will be back here tomorrow with Brittany.